I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with the wealth consultants at Five Plan Partners. Now here's Greg Powell and Ashley Page.
Rolling in 3, 2.
Welcome to Investors Insights for August 4th, 2014. We have a lot of important information to share with you today to help you gain confidence in your life. If you're watching this on our blog, I encourage you to subscribe to it. Simply type in your email address to the right of this video and click submit. If you're listening to this as a podcast, subscribe in iTunes or your podcast provider. This way you can stay up to date on important financial and market information that we have for you each week. So let's jump right into it, and jump into it is exactly what happened last week as we saw the markets trade back. Dow Jones, S&P 500, the Russell 2000 got hammered last week. Small caps have been hit very hard in this market. We used to, last year when the Russell 2000 and small caps were doing so well, we used to jokingly say it was Russell the muscle because it came plowing through. But we're seeing just the opposite now on the small cap end. We had quite a few events occurring last week. Case in point, Vladimir Putin and all the restraints they're trying to put on Russia from an economic standpoint, just to take a stand there. That's causing jitters in the market. You had Argentina starting to really give us strong indications that financially they're not sound, and that bothers everybody very much. And then from the standpoint, the other topic that was big just had to be about inflation. Big debate going on with the Federal Reserve and Janet Yellen in her leadership. The hawkish members of the Federal Reserve are feeling like rates should start moving up. There's still as we call the doves, or those less inclined to move too fast, that believe that staying at this zero interest rate policy is a good place to be. Although the economic news, and Ashley's going to talk about this, is that the economic news is still showing very strong, even though you've got all these headliners like the situation with Russia or with Argentina taking place. And so as we maneuver through all this information that's impacting the market, we are determining, is this an opportunity to add to positions, or is it a situation where we need to start taking some profits and moving into cash? So that's a debate going on here at Five Plan Partners. That said, interest rates are going to be a big topic as we continue through the week. And also through the rest of the year. One thing I want to emphasize, and we were having a lot of dialogue about this, interest rates at some point here we know will have to move up, and that can have an impact on the bond market, and that's why you've seen us taking positions more towards short-term maturities. But at the same time, keep in mind, if interest rates go up, if corporate earnings are still doing well, the stock market might take a breather, but not,
plow back into
exactly,
it.
Well said. So on that note, we've got a lot of negative news out there that we're watching closely if we think it could impact your portfolio. But at the same time, we've got a lot of positive news, I think Ashley needs to talk about that. Ashley, go ahead and talk about corporate revenues.
No, happy to, Greg. And Greg's exactly right. That was a lot of macro data in a short period of time last week, and it was very compressed. It was a lot to take on.
Right.
And but what the guys and I were looking at over the weekend that is really encouraging to us is what revenues are doing in large corporate America.
Right. True.
Remember, we have our top 5 we always look at. Number 1 on that list is corporate earnings and how they're doing. And as Greg will tell you, over the last 2 or 3 years, companies really have been producing the numbers they really need to get to, which is the net income number, by getting more efficient and cutting costs.
Right.
That's really the way they've been doing it. Well, we've said on prior vlogs here that at some point, people have to start buying again.
Right.
You can't cut yourself into oblivion, and you can't cut your income statement down forever.
Right.
At some point, you have to have people buying your product.
Right.
Well, the thing that we saw from last week, that really is beginning to happen again in a pretty big way.
Confidence level that way is up.
It is, very much so. And not to be too simplistic about it, but generating your net income is a matter of what your revenues do minus what your expenses are.
Right.
really since 2008, what these expenses are is how people have been generating it.
Right.
They've been getting more efficient. They've getting leaner staffs. To Greg's point, technology, they've embraced much more. But what we see now is that people are back buying again. And that's not something we've been able to talk about quarter over quarter for a couple of years
True.
now,
That's very
even though
true.
the economy's gotten better.
Yeah.
So we'll share some data on it that Greg and I were looking at over the weekend. Remember, the economy contracted. A lot of it was weather related, 2.1% in the first quarter. Really, the GDP number last week was up about 4%.
Correct.
What's happening is that's tracking what corporate America is doing. Those numbers are very close. The revenue line for the last 2 or 3 years has been relatively flat. So again, you've been producing your earnings and thus your stock price and moving up and down and doing cutting
Right,
and being
right.
more efficient. Now, very significantly, what we saw with the second quarter data coming out, the revenue line grew 4.3% quarter over quarter versus second quarter last year.
Which is a great number.
It's huge. I mean, we have not had that level of growth since the first quarter of 2012.
Right.
And if you go and look at it, the other thing that Greg and I are encouraged about, well, several things. One is that earnings number. We've already had, in terms of large corporate America, we've already had about 75% of earnings already reported.
Right.
So that's good data. You know, you've only got about 25% still left to report, so that's not a whole lot that are just hanging on
Right.
analysts. You've got the majority of it showing good data that's already in the barn,
Yes.
so to speak. So that's already up nicely. The other thing that we've seen is that these same companies, they are feeling much better about their backlog. And not only who's buying now, but who's about to buy.
Right.
You know, if this calculator here, we can go into the store, we can buy that today. But a large machining tool, Greg and I are going to order that, 4 months before
Right.
we need it to layer into our production. The backlogs are very good.
They
you
are.
can tell they're really starting to build.
Well, that's
and
one
get
reason. That's
backlogged
one
up.
reason we track trucking, rail.
Yeah, good point.
People have to order in advance. So if you're looking at the numbers on the rail shipments that are projected over the next 4 coming months or trucking,
gotta carry it?
Yeah,
Yeah.
right.
Who's gotta carry
if they've
it?
got those orders, that tells you people are planning on selling that product when it gets into their store or into their factory.
Absolutely. So not only do we see that the revenues are up very nicely, and that's really encouraging to us because we finally feel like after we've been telling you on the vlog, at some point people have to buy stuff. Now they're beginning to buy stuff,
right.
and we're thrilled about that. The final thing that we'll tell you is that upward momentum is very broadly based. It's not just in one sector, it's in a lot of sectors. Greg and I've got some numbers to share with you. For example, that quarterly gain in large healthcare up 12%. Good. That was the best.
Yes.
Technology firms up 6.5%. That's good.
Right.
People are going in and still trying to improve the process. 3% in telecom makes sense. That's a little more staid industry when you look at it. But also 3% in consumer staples and 5% in just consumer discretionary. So what Greg and I like about it is it's very broadly based where it's coming
Right.
from. Finally, we'll tell you there's some retail coming out here in the next week or two, more higher end retailer. And one reason that we look at that is that a lot of times people will begin, if they're really feeling confident, to go from kind of a mid-range type price good more to a luxury good.
Right.
So one thing that hadn't been reported yet that Greg, Frank, and I are watching or what's going to happen here in the next week or two with some of these higher end retailers. Because if you really start to get a number bump there, like you're getting here, that's really going to be significant.
True.
So in looking at that, as Greg said, that was a lot of negative news last week, but if you really pare that back, the underlying fundamentals here are very good.
Right.
And
Well, the U.S. market's looking very strong.
it certainly is.
Still looks very strong. From an international standpoint, that's a whole different issue.
It is.
But U.S. is looking very strong.
It is indeed.
So, yeah. So, on that note, keep in mind that even though you're turning on your TV or getting on your computer, you're seeing a lot of this negative news. There's a lot of factors in this country that are holding their own.
Oh,
And
absolutely.
We feel very good about that. Ashley used 2 words I think are very important here: confidence,
Yes.
trust. And in that, we want you to have confidence in us. We want you to have complete trust in knowing that every day we're looking at these portfolios and financial blueprints and tying it into what activities, this data like Ashley's talking about and other data that's coming at us rapidly, that we're looking at it to see how it impacts your portfolio. How does that impact your long-term goals and your short-term goals? And so we're watching that very closely. But right now, we see a lot of positives.
We do.
If you pull back the curtain.
Absolutely.
Don't deny that there's negatives out there. So anyway, we hope you have a great week. We hope that you continue to forward this to friends and family, and also continue with emails and phone calls and discussions with us. We want to stay in touch with you, but we love when we hear from you as well. And we'll keep you updated as the week progresses, and look forward to our next vlog. Thanks for joining us.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.